Hello, and a very warm welcome from the British Chamber of Commerce in Singapore. Sorry for the slight delay in getting started. I think a few of us were having some connectivity issues. It's wonderful when technology goes well. A very warm welcome to you all to this webinar on the impact of COVID-19 on the Singapore economy. It's a great topic. My name is David Kelly, and I am the Executive Director of the British Chamber of Commerce in Singapore. We're delighted to have some brilliant speakers for you. Wonderfully, we're very lucky to have Vikram Khanna, Associate Editor and Economics Columnist at the Straits Times, to moderate the session, joined with Shanker Iyer, the Executive Chairman of Asia for IQ-EQ, and one of our brilliant past presidents of the Chamber as well, and also Chief Executive of the Singapore Business Federation, Ho Meng Kit as well. So thank you all so much for joining. These webinars are absolutely something that the Chamber is very passionate to keep delivering. Being connected with our members, sharing great content, having great speakers, keeping the business ecosystem up to date is absolutely something that we are hugely passionate about. And events like this can't happen without the great support of my staff, so a big shout out to them, who have done a wonderful job in supporting and creating a series of digital content that we're broadcasting to members, but also to our sponsors. And a quick thank you to Lloyds Bank, who have supported this webinar as part of our Future of Trade series. Lloyds Bank Commercial Banking is part of the Lloyds Banking Group. It's a UK-focused retail and commercial bank with more than 30 million customers across the globe. The group's strategy is built on being the best bank for customers and colleagues alike, and creating value by investing where they can make a real difference for their customers. So thank you very much to Lloyds for all of your support and for continuing this great content in a slightly different format to what we're used to. Today's webinar will look at the impact of COVID-19. It's had an impact on all of our businesses and more broadly, the Singapore economy. Lots of news has come out around the various packages, etc., and the impact that the situation is currently having. And this is a great opportunity to have some fantastic speakers to talk about the impact in the Singapore economy overall. If you would like to ask any questions, you can find a Q&A function on the bottom of your toolbar. Please share your company or industry followed by your questions so that we can help the speakers to best answer your questions. A quick final note that this webinar will be recorded. Just so that you're aware that we will be pushing this content out to our wider members. So without further ado, I'm delighted to hand over to Vikram Khanna, Associate Editor and Economics Columnist at the Straits Times, to share his insights and set the scene for today's presentation. Vikram, thank you very much, and over to you.
Thank you, David. Hello, everybody. I can't see you, and you can at least see my picture, so that's good enough. I won't take too much time. I want to basically just set the stage, set the backdrop for what we're going to discuss. I think it's probably no exaggeration to say that we're facing the biggest economic event of our lifetime, well, at least my lifetime, and also the worst pandemic since the Great Spanish Flu of 1918. Now, the economic forecasts are all just guesswork at this point. The IMF has just come out with a forecast of -3% for the global economy this year. This is a more than 6 percentage point swing from its forecast as recently as January. And it also says this is the worst recession that we're facing since the Great Depression. Now, nobody expects a V-shaped recovery anymore. There was early talk about that. The only question is whether it's going to be U-shaped or L-shaped, or at the moment, it's fair to say that it's I-shaped. It's just a vertical line going down. Now, policy makers have pulled out all the stops. We have unlimited monetary easing. The fiscal taps have been turned on full throttle. You have all kinds of tax benefits being showered on companies. But for all that, I mean, I don't think this is going to prevent the economic damage that we're seeing in the form of shuttered factories, disrupted food supplies, bankruptcies, liquidations, and maybe even signs of a financial crisis. We have seen some early signs of that. This is going to have huge effects on generally the economies all around the world, you're going to have increases in poverty. You're going to have a rethinking of social contracts. There's going to be structural changes, quite huge ones. For example, many supply chains are moving out of China because companies don't want to be dependent on just one country. Protectionism is rising. We have countries restricting not only medical supplies, but even food and other essential materials. Other changes are afoot. There's remote work has become the norm for many professionals like myself, and probably for many of you. But I'm aware it's not the case for everybody. Some of these changes may be permanent, and some may even be positive. Now, as a small trade-dependent economy, Singapore is going to face the full force of this crisis. We are certain to have a recession. The only question is how bad it'll be. The government says we could go down as much as -4% this year in terms of GDP growth. But you've got to bear in mind that a lot of things are very fluid, and the forecasts are subject to revision. Nevertheless, the government has responded very strongly with not one, but 3 budgets in less than 2 months. It has provided wage subsidies, tax rebates, support for the self-employed, loan support, cash for households, and so on. And we'll hear more about that shortly. Well, to take us through a lot of what's going on and the impact on Singapore, we have 2 very distinguished experts. Meng as CEO of the Singapore Business Federation, which has, I think, 29,000 members, has a bird's eye view of the economic impact of this on Singapore companies. And Shanker Iyer is a tax expert, and he'll talk us through some of the tax implications of the government's response in Singapore. So without further ado, let me hand over to first Meng. After the 2 speakers have spoken, we'll take Q&A, in which I hope you'll participate. But anyway, over to you, Meng, for now.
Thank you, Vikram. I'm going to share my screen. Thank you. Good day, everybody. I'm just going to maybe elaborate a little bit on what Vikram has said on the impact on COVID-19 on the Singapore economy. As Vikram has mentioned, the Singapore Business Federation, we have more than 27,000 members. Most of these members are small and medium-sized enterprises. And, what we do in most budget is to get feedback. So a lot of the views that we have are through surveys that we have gotten from our members. And we did quite a few surveys over this particular period. As Vikram has mentioned, just yesterday evening, the IMF has revised its forecast for the global economy. As a result of the pandemic, the IMF has projected that the global economy will contract sharply by 3% in 2020. It is indeed a 6 percentage point swing. And this is really much worse than during the 2008 and 2009 financial crisis. In their baseline scenario, which assumes that the pandemic would fade in the second half of 2020 and containment efforts can gradually be unwound, the global economy is projected to grow by 5.8% in 2021. As economic activity normalized, helped by policy support. So if you look at where the impact are, overall, the impact is -3% this year, going back to 5.8 overall. For advanced economy, much sharper drop, but with a recovery next year. But for developing economy, still into recession, but better recovery in next year in 2021. However, in this particular same IMF projection, they have also projected that Singapore's economy will grow -3.5% this year. So they're projecting a recession of 3.5. And this is This is what has happened in Singapore. MTI has since the outbreak has revised our GDP forecast downwards. Right now, the projection which was done in March was at -4 to -1. And this is from an earlier estimate of -0.5 to 1.5. So the first quarter's advanced estimate has already seen an output drop of 2.2%. So I am sure that with the IMF and with the circuit breaker actions that is currently ongoing, it is likely that this forecast will be revised yet again. So certainly the IMF figure, the projection is within this range that MTI has forecasted in March. Now, the Federation also does its own sentiments from among SMEs, and we do this every quarter. And it is a look ahead over the next 6 months on business sentiments on different sectors. The sectors are here, all here on the left-hand side: commerce, trading, construction, manufacturing, retail, F&B, business services, transport. Now, we did this survey. This survey period was done in middle of January up to the end of February. So it does not have incorporated the full impact of the impact on COVID-19. But it's important to note that even with these numbers, already the sentiment is an all-time low of 48.3. Anything below 50 is negative. And if you look at it, if you look back throughout the history of the index, we started this index in 2009. It has never been this low, and it's negative for all the sectors. So we expect, therefore, that in the next quarter, when we do the forecast for the next 6 months, this number might even be less. Now, COVID-19 development, just a brief sketch. During the Chinese New Year period, the spread was in China. Now it has spread worldwide. We started very early with medical screening. We started to have border restriction, and then increasingly social distancing. And then when Malaysian implemented their movement control orders, we had also quite a bit of disruption as a causeway, because many Malaysians from Johor come to Singapore to work, and at the same time, there is a supply of food as well as manufactured goods that flow through the causeway as well. So we had to deal with that. And then subsequently, the government tightened its ban on public gathering and social distancing. And in last week, we are now 1 week into the circuit breaker, with increasing measures being tightened. Now, only essential businesses are allowed to open, and those who businesses can work from home are required to work from home, and all schools are closed. So we are in the middle of a circuit breaker period. Now, this is a report that comes out every evening. It accompanies the Ministry of Health outbreak development. So if you look at where we are in terms of how we are combating this crisis, first, there are 3 groups. The one in orange are community. So if you look at it from the initial days, we had the community spread very much under control. Then we had a number of imported cases, Singaporeans coming back from their March holidays, residents and Singaporeans coming back from overseas. So these are indicated in blue. Now the imported cases are now very much under control. But of course, what is alarming now is that there is this portion, which is the red portion, which is confirmed cases of work permit holders as well as those in the dormitories. So if you look at the number of cases, they are much larger. So right now we have 3,200 confirmed cases, of which almost 2/3 of them are more than half of them are work permit holders and foreign workers of Singapore. This number is forecasted to go up over the next few days as they test more foreign workers in the dormitory. So this is where we are in terms of the dealing with the crisis. Now, as Vikram has said, the government has responded with three, most unusual in my lifetime, three budget: the unity budget, the resilience budget, as well as the solidarity budget, deploying up to almost $60 billion, which is 12% of GDP, to deal with and steer Singapore through the challenges. I have listed out all these budget measures, but I have grouped them by color. If you look at those in green are meant to help businesses cash flow. So you have the job support scheme, the enhanced wage credit scheme. I think the enhanced wage credit scheme has already been credited in March. The enhanced job support scheme will be credited to companies in end of April. There are also deferment of income tax payment for 3 months. Government has also committed not to increase its fees and charges for a year. And tax rebate, and very unusually is a waiver of the monthly foreign workers levy due to the circuit breaker in April this year. And also, in addition to that, a rebate of $750 is also given for every foreign workers that is employed by companies, and that is also given in April. So all these, including rental waiver, property tax waiver, were given in these three budgets, and they were meant to help with the cash flow of companies. Then there is a second group of measures which were given out in this budget. These are shaded in purple. They are basically credit schemes, much like many other countries in dealing with this. They had to make sure that SMEs are well supported, and the financing schemes, working capital loan scheme, loan insurance scheme, temporary bridging loan scheme were dished out by government, with government taking on greater risk share up to 90%, and also increasing the quantum of the loans, particularly for the temporary bridging loan and the small SME working capital loan to SME. And the last category are schemes from government for workers, to support workers in terms of helping companies manage their workforce. So there is training support. This Adapt and Grow redeployment program is basically subventions for companies to send their workers for training. And in this budget also, the government has also maintained a sizable amount of money for SMEs to continue to look at enterprise transforming, to look at reskilling of the workforce. So a very comprehensive range of measures, but a lot of it is on basically helping companies deal with credit, deal with costs, and deal with their cash flow. In addition to the fiscal measures, there were also some action on the nominal effective exchange rate. Since late January this year, the exchange rate has depreciated in line with declining inflation and the sharpening weakening of economic growth in Singapore. I think right now the current level of the effective exchange rate is slightly below the midpoint of the previous policy band. So MAS announced in middle of March that it will adopt a 0% per annum rate of appreciation of the policy band starting at this current prevailing level. So there will be no change to the width of the band. There is, they will have a 0% appreciation. So what it means is that there is, MAS has come up with a policy announcement to provide stability to the trade-weighted exchange rate. In addition to that, MAS, together with the financial industry, has also announced a package of measures to ensure liquidity in the market and well-functioning funding market. So they have provided ample Singapore dollar liquidity as well as US dollar liquidity in the system, and also established a new MAS US dollar facilities up to 60 billion for funding to support stable US dollar liquidity conditions. Now for borrowers, for SMEs, the package also provide deferment payments on principals on secured SME loans until the end of the year, and also provide cheaper loan capital so that they can provide lower interest to SME loans. And there is also assistance with insurance premium payments for SMEs as well. And for individuals, recognizing that we need to deal with the balance sheet of households, banks are also made available facilities to defer repayment of residential property loans until the end of the year, lower interest on personal credit, personal unsecured credit, defer premium payments for insurance, as well as having flexible installment plans as well. Now, this is not really strictly a government response, but government initiated the National Wage Council deliberation. Normally, the National Wage Council would meet in May and finalize its guidelines in May. But this year, because of COVID-19, the government convened the National Wage Council, and they have finalized their guideline at the end of March. And this guideline was released end March. Four main parts of this guideline. First, it urges employers to reduce non-wage costs and manage excess manpower. Basically, don't retrench people, but look at reducing non-wage costs. Secondly, is a call to businesses to press on with business and workforce transformation. Now, on the wage recommendation, the Wage Council recognized that if companies do need to manage wages, then management have to lead by example. And also, if they are to reduce and cut wages, then adjust the monthly variable component of the wages, but endeavor to pay the annual wage supplement to employees. And I think there's also a call to adjust wages of all workers fairly, giving due attention to low-wage workers, particularly those who work less than, who earns annual monthly wage of less than 1,004. Now, if companies have to retrench, then they should retrench responsibly. And there is a recently issued guideline for retrenchment, and also a requirement to inform the Ministry of Manpower and consult the unions if companies are retrenching. So that was the wage guideline that were issued end of March. Now, recognizing also that there could be insolvency because of contracting issues, the government has also introduced and passed the Temporary Measures Law Act of 2020. This was passed on the 7th of April. This provides relief from legal actions from contracts. So the contracts include leases, construction and supply contracts, contracts for provision of goods and services, contracts relating to events in the MICE space, in the tourism space. It also provides temporary relief for insolvency for individuals and businesses. It increases the threshold for bankruptcy for both individuals and businesses. And I think one very important change was that because government has introduced property tax rebate in order to help commercial tenants, so the government has also passed a law requiring commercial property owners to unconditionally pass on their property tax rebate in full to their tenants. So failure to do so is now an offense. So government actually introduce all these measures very quickly. So this is really to solve insolvency issues. Now, as I mentioned earlier, the SPF had conducted several surveys, and I just wanted to, give a sense of what our members feel at different points of the crisis. And this survey was done in middle of February after the first budget. So this is middle of February. So at that point, when we polled our members, their top concerns of our members was, first of all, they felt that there is a decline in demand and they have to manage their wage costs. And already then, about 83% of our companies expect revenue to decline by more than 10%. So they are expecting, because at that time, it was really the tourism and travel industry that were mostly affected. And the top measures adopted by our members to cope with excess manpower is to place staff on no pay leave or to reduce their work hours. At that point, most companies do not require any additional assistance to cope with the Malaysian movement control measures. And they felt that the wage credit scheme, the skills future topped up, were something that were useful. Now, at the resilience budget, which was a couple of weeks later, about 5 weeks later, the most useful measure became the enhanced job support scheme. And those measures that actually help the companies immediately with cash flow. So the enhanced job support scheme, the 3 months deferment on income tax, the freeze on government fees and charges were all very useful. And they all viewed that the resilience budget at that point was 48 billion, was impactful and timely. But at that time, they were still concerned that the measures were insufficient, and they felt that they could ride out the situation for at least 6 months. And many of our businesses expect that, most of them expect that this current situation would moderate the impact on their plans to transform and internationalize. So these findings were made in early April, before the circuit breaker. So I'm happy to have a discussion with you and Vikram later. What is the latest situation of our member during this circuit breaker period? Thank you very much.
Very good. Thank you, Meng. That was quite thorough. But yes, you have a lot of questions to answer after that. Can we now move on to Shanker? Shanker, over to you.
Thanks, Vikram. Well, thank you, Vikram. Thank you, Meng. Good afternoon, ladies and gentlemen, fellow members of the British Chamber. I'm very pleased to have the chance to speak to you on this webinar. I'm going to focus on Singapore budget tax measures. You've heard from a very comprehensive presentation from Meng. Meng, by the way, is probably the most connected person in Singapore as head of the SBF, which has 29,000 members-ish. I think he has the ear of anybody in Singapore matters. So I think his words are very important, I think. So if I just talk a bit, I won't try and repeat too much of what he said, because I think he's covered most of the non-tax measures. My agenda of this presentation is as follows. I'm going to say a bit about 2019. I'll tell you why in a minute. Then we talk about the stabilization support package, some changes on incentives, some comments on GST, and a few other updates. You might wonder why I'm talking about the 2019 budget. Now we're in April 2020. Actually, 2019 now seems so far away, right? That time, the economy was doing well. And Singapore budget speeches tend to be more strategy documents in nature and don't go into much detail. The detail comes later in the day when you see the actual paperwork. And about 3 or 4 items came in there, which actually was tax increases, which are going to kick in this year. So therefore, I think at what happened, therefore, no one took a notice of them. So I just wanted to highlight to members that their taxes actually started to go up this year before they come down by the immediate measures. So if I can run through 3 or 4 of them. Singapore has a very attractive startup tax exemption. So companies who start up, and is defined as a company which is Singapore incorporated, resident here, and the 20 or less shareholders, of which at least one must be an individual holding at least 10% of the shares. So long as they aren't involved in property business, they had a very attractive tax system in Singapore. The first $100,000 of profit was tax-free for 3 years, and the next 200,000 was taxed at 50% of the standard rate of 17%. So very attractive scheme. So they tightened that up from YA 2020, which is YA 2020 in Singapore is any financial year ending in 2019, which is just passed. So then they tightened that up a bit. So at the first 100,000 of profit for 3 years has a mere 75% reduction on exemption on the main charge ring. And the next 100,000 only has a 50% tax exemption. So therefore, if you can do the maths, you'll see that already profits for startups will be taxed at a higher rate. Then there was also an attractive partial tax exemption which Singapore introduced many years ago, which Hong Kong copied about 2 or 3 years ago, whereby for the first $300,000 of profit, the first $10,000 was almost tax-free, and the next $300,000 was taxed at 8.5%. So once again, they've now tightened that up from YA 2020 so that the next 190,000 only is taxed at 50%, and the balance 100,000 therefore would be taxed at the full 17%. So a simple illustration will show you at the bottom that somebody had a profit of $300,000 of chargeable income. Previously, their effective tax rate was 8.36%, has gone up now to 11.19%. So therefore, an extra tax of $8,500. I'm setting the scene here a bit because when you see the tax reliefs they're giving you, it's actually in effect balancing some of the exemptions, the increases which have already taken place, will take place. GST, 2 changes were announced last year. The first one, I'm sure, is giving us extra revenue to the ministry here. GST has been imposed since 1st Jan 20 on imported digital services, since the movies, music streaming, etc., which I guess with everybody working from home now, much more of this is happening than before. So I assume the GST collections from this source are also going up. And the second one is a more technical change. Singapore in the past used to charge GST on imported goods, but they've also brought in a GST on import services from 1st January. But this actually, although sounds quite serious, it impacts a very small segment of the economy. So I won't go into detail here, but very specialized businesses such as banks. The next one, the final one from the last year was the NOR scheme, the last bastion of expats tax benefits in Singapore. I mean, I came to Singapore many years ago. At that time, this was an expat paradise. There's so many benefits for expatriates that if you structured your income properly, you could pay little or no tax. The one by one, they've chipped at it. So the one remaining tax benefit was the not ordinary residence scheme. And this was actually now has lapsed now since 2020 year of assessment, which means calendar 2019. But it's still got a 5-year life. So therefore, anyone who came to Singapore last year or for the 4 years before can still apply for this, this scheme, and has a very attractive tax benefit. It affects people earning more than $160,000 per year, Singapore dollars. And if they travel on business for more than 90 days in a year, they have a maximum tax rate of 10%. So those of you who haven't applied can still do so. It might well worth you considering doing so because the tax savings are very attractive. We're going back to the 2020 budget now. The whole of the budget was really at that time, COVID-19 had just about started to impact Singapore. So the minister's focus was on giving company cash flow, immediate cash flow relief. So a number of measures were set out to allow that to happen, which I'll just go through it quickly. Corporate income tax rebate. The previous year, each company had a 20% rebate capped at $10,000. But for YA 2020, the rebate has now increased to $15,000 for the 25% of tax payable. Property tax rebate, which Meng alluded to. At that time, the focus was really more on the hospitality and restaurant type of industry. So anyone in hotels, commercial properties linked to hospitality or the retail, let's say, were given 100% tax rebate for 2020. And at that time, integrated resorts also had a 60% rebate. And the last budget, now they have introduced a 30% rebate for other non-residential properties, including offices in particular, which impacts most of us on this call, I assume. But just to make a point, residential properties are not covered by this, and even if you work from home, that doesn't matter. It's not covered. And as Menkit alluded, in the legislation which was passed on 7th of April, there's now a legal requirement for property owners to pass on property tax rebates in full to tenants. So I'm pretty sure that all of you will benefit from this. Now some technical points. Singapore has a loss carryback scheme, a very minimal one actually. So if you have loss this year, then you can carry back 100,000 of that against previous year's profits or to get relief. In the past, you could only do it for 1 year. Now you can carry that back for 3 years. But again, the cap is at 100,000. There was some disappointment that the cap wasn't increased to a higher number, but I think that's at the moment it's only 100,000. The next point was to encourage people to accelerate the capital allowances for cash flow. Right now, for all IT equipment, it's 100,000 write-off 1 year, which has been there for many years. But all other assets, including furnishings and so on, there was a 3-year write-off. Now, companies can claim faster over 2 years, 75-25. So that's something for companies to take in mind if they want to claim and faster. But once you claim, you can't revoke this. There's a technical reason for this, but I think at the moment, I'll just stop at that. Then the next one was renovation refurbishment. There's a companies have an allowance with a small cap of 300,000, which say over 3 years, where they can write off such expenditure over 3 years without question. And now the minister felt at that time that companies may wish to use this downturn to renovate their premises and so on, so they can have a faster claim. But the 300,000 cap remains, so I don't think, keeping in mind the tax rate is 17%, the tax saving in itself, I doubt, has made anyone rush to renovate their premises. Then installment plans. This is currently Singapore probably has one of the most generous tax payment systems. They only ask for tax payment after the financial year end. So once you actually earn the profits, you can pay the tax. And that too, they allow you to pay over 10 months if you claim early enough to do so by installments. And compared to many countries who insist on paying tax in advance, so therefore it's much more painful. What the government did at the budget was to increase this installment plan by further 2 months, so 10 became 12 and so on. But if you hadn't applied for installment plan, then too bad. So this is, again, only impacting for this calendar year. Then tax, what Singapore has done, as many countries around the world have done, is to extend tax filing deadlines. So individual income tax filing deadline was supposed to be 18th April, has now been extended to 31st May. Those using professional tax agents always had a longer time to pay, June, which still remains, but otherwise 31st May to file. And similarly for clubs and charities, etc., they can now file by 31st May. And companies, to allow for the estimated chargeable income during the circuit breaker period, now have a further month to give their estimated income to the government. Tax file deadlines for GST have also been extended a little bit. The March GST return was due by 30th April. The government is now allowed a further 11 days to do that. Withholding tax returns to a further 1 month. And foreign employee tax clearance, there's an additional 1 month to do the clearance. So I think the recognition is that in April, maybe the productivity would lower because people working from home, so they're allowing more time to do this filing and extensions. The income tax payment for companies, as Venkit alluded, there's an automatic 3-month deferment for tax payments for due in months of April, May, and June. So whether you have an installment plan or not, you have a further 3 months to pay your taxes. And I think companies have already started receiving notices for this. And personal income tax too, similarly, will get another few months, 3 months to pay. Singapore inland revenue has also given some technical tax concessions, which companies have inadvertently be caught by lack of movement of people. And there's 4 of these, just to highlight quickly to you. Tax residence of a Singapore company typically requires companies to hold physical board meetings in Singapore, amongst other conditions. So what they are now saying is that because directors may not be able to attend meetings due to travel restrictions and so on, they're willing to concede that long as conditions remain the same as the previous year, they'll deem the company to remain tax resident for this year as well. Similarly, permanent establishments, another technical point. If employees for foreign companies are in Singapore, under tax law, they could inadvertently create a permanent establishment for their foreign companies in Singapore, and therefore subject that foreign company to tax in Singapore. So again, they're saying because of travel restrictions and so on, they've said if you didn't have a permanent established in the past and there's no other changes, that this unplanned presence will not count against you. Similarly, citizen PRs who were working overseas before, who came back to Singapore because they felt safer here, are now working remotely from Singapore for the overseas employment. Once again, they've said they won't regard them as Singapore tax if certain conditions are met as laid out. And the final one on foreigners who are here on short-term business assignments but couldn't go back to their home countries because of travel restrictions. Again, if their stay is here for not more than 60 days, they would not be considered tax resident. So revenue in Singapore has basically tried to be practical about this and continues to look at other areas where this current situation shouldn't disadvantage companies, which is, I think, a reasonable approach. Moving on to tax incentives. Singapore has a number of tax incentives. A few of them, and these tend to be on a time limit basis. They call them sunset clauses because they want to make sure the policy intention is being met. And after the 5 years, typically they tend to either cancel them or renew them for a further 5 years. So in this budget, there was a few such incentives discussed. First one was the internalization scheme, double tax deduction. This, I would say, probably is the most attractive scheme available in the Singapore domestic scene at the moment. Most companies who are based in Singapore have expenses incurred for overseas traveling, trade missions, et cetera, and they can actually claim 150. We used to be able to claim 150,000 of such expenses for double deduction with no questions asked. Basically, the government, the ministry trusts you. Of course, if they have doubts, they can question, but by and large, is based on trust. And with effect, and this was due to lapse on 31st March 2020. So that was extended in the budget to 31st December 2025. And the qualifying expenses have actually been increased. The scope has been increased to cover a few other categories as well. Next on mergers and acquisitions. Again, Singapore has given some generous tax breaks to encourage Singapore companies to engage in M&A activities. And that's again been extended now to December 25, except there have been two small changes. There was a stamp duty relief, which has been now abolished. And secondly, they were in the past allowing MNCs to use their Singapore holding company to do acquisitions from here and allowing the relief to come to them as well. But they said, no, now it has to be only a Singapore company owned by Singapore, cannot have ultimate holding companies on top of this. So basically for Singapore companies only. The other attractive feature of Singapore tax is the safe harbor given to companies for ensuring that the gains on disposal of shares are tax-free, so long as they had a minimum of shareholding of 20% of the ordinary shares of the investee company and held the shares for at least 24 months. And this scheme was running out in 22 and was causing some nervousness to the market because many people benefit from this. And the government has now extended this to 2027. But again, like in the case of one or two other schemes I announced earlier, they're trying to discourage this route to be used for property business. So in the past, it did not apply to disposal of ordinary shares of a company in the business of trading or holding properties in Singapore, but they allowed property development. But now they have also stopped property development in Singapore. And also you cannot use this route now to be a safe harbor for trading, holding, or developing of properties overseas. A number of other schemes were running out, which they've now extended. There's venture capital. The Global Trader Program is very popular. People who do international trading based out of Singapore, so that continues to 26. And MSI basically refers to shipping industry, a number of schemes there, which have also now been extended to 2026. GST, a couple of comments. Many of you remember that about 2 or 3 years ago, the minister announced that GST would be increased the next parliament to between 7 to 9%. Very few governments actually can talk about tax raises in the future parliaments, but here that's possible. So in this budget, the minister announced that 2021, GST will not be increased. At that time, the speculation whether this was an election announcement or not, but fact is, it won't go up. But I think the way money is being spent now, I think it's quite possible that GST would have to go up pretty fast soon. But I'm sure, Vikram, we can discuss that later. Individuals, not much changes happened. There used to be some scheme for withholding tax exemption for non-resident mediators and arbitrators. That's been extended. Non-resident public entertainers, there was some lower withholding tax that's been extended. And there was a scheme to encourage angel investors to give tax deductions, but that lapsed because it was not being used much, because there's other schemes in the market which cater to such people. Personal tax rebate, there was one previous year, there wasn't one this year, very small as you can see. Other updates, if I could just finish off, now Meng has covered all these actually. Job support scheme is, I guess, the most significant one at the moment. And the first payments will start this month. Next payment, I think, will be in July, and for the third one, October. Right now, for the month of April, the support has been increased to 75% for any salaries up to $4,600 per month. And this for all citizens and PR employees without a salary cap. So even someone earning $10,000 a month, the first $4,600 will attract this support. So that's important to know. There's some debate going on now with the inland revenue whether it should be taxed or not, because in the previous recession many years ago, a similar grant was not taxed. Now I think they are having in mind to tax it, but there's some lobbying happening behind the scenes. Senior employment credit continues to be there. So this is essentially to encourage companies to employ Singapore citizens over 55 years old, and they get a special credit given to companies to encourage them to do that. The wage credit scheme might not apply too much this year, but again, the Singapore government gives subsidy of, I think, 20% of pay increases given to Singapore citizens earning less than $5,000 per month. Foreign worker levy, anyway, has been touched on, but this was I guess, one of the few measures announced which help companies to employ foreign workers. For instance, SPAS holders, etc., will now get an extra relief for that. And finally, I would just announce, I mean, the mention was given at the budget speech that a number of enterprise development schemes have been enhanced. There's a whole list of them. All I would encourage any one of you is please go and study these. There's a lot of money out there waiting to be given out to companies. Some apply to local SMEs only, and the conditions for such SMEs are they must be operating in Singapore. At least 30% of the company's shareholdings must be held by a citizen or PR, and the group sales must not exceed $100 million or employment of not more than 200 workers. But a number of these are also available to any company operating in Singapore because they help to develop Singaporeans as a whole. So I think it's well worth following. I know it's not a tax measure, but I thought I'd mention it in passing because it's worth following up. So on that note, Vikram, I'll stop there. So thank you all very much and happy to answer any questions. Thank you.
Thank you, Shanker, and thank you, Meng as well again. I think we have two very thought-provoking presentations, which raise many questions. Could you please use the Q&A function to submit your questions? And as they come, I'll put them to whichever participant you address them to, or otherwise open it to whoever wants to answer them. But let me just begin to kick off this session Menkit, you said towards the end that that the survey doesn't take into account the latest circuit breaker measures. Now, and I think you alluded at the beginning that Q2 will probably be worse than Q1, even worse than Q1.
Yeah.
So could you elaborate on what the latest position is as far as the sentiment of SMEs to the business prospects are concerned? And also, which will be the worst hit sectors and which will stay relatively resilient?
Well, I think those right now in the middle of, we have not done a formal poll of companies during this circuit breaker period. But I would say that almost everybody is on lockdown except those who are declared as essential services. And even yesterday, the government has announced that they want to prune the list of essential services down. So I would say that all sectors are affected quite equally. So certainly the enhanced support scheme is going to be very important for companies who essentially demand has essentially disappeared now. You know, so we think that there are some early signs of companies looking at laying off workers. We think that there are early signs. It's not in the statistics as yet, but I imagine that if the circuit breaker is not successful and government extends the circuit breaker, I think those stresses on businesses will be even greater. So I'm not surprised that at the end of this there will be, I think, quite heavy retrenchments amongst our companies, because no one is spared during this period of circuit breaker. Yeah.
Right. That sounds quite grim. Yeah. Just to follow up, and this is I also ask a similar question to Shanker, but just for you, Menkit. I think the big question that a lot of people are asking is whether the government's measures so far, as comprehensive and aggressive as they are, whether they are sufficient. You know, for example, I mean, a lot of them are time bound. The enhanced job support scheme is only till April. The waivers of foreign worker levies is also only for April.
Yeah.
Income tax is deferred by just 3 months. Government rental waivers are for 1 month. Although the government taking higher risk on working capital loans is for a year. But the point is, a lot of these are very time bound.
Yeah.
And will that be enough? I mean, will that be?
I think the most important right now at the moment is to make sure that the circuit breaker works. You know, so I think I personally is fully supportive of the enhanced measures that has been introduced. I mentioned about, you know, reducing the list of essential firms. I think the thing is that if it doesn't work and we have to continue with the circuit breaker, for sure there will be demand from businesses to extend the support that was offered in April, whether it's the enhanced job support scheme or foreign workers levy, for a further period of whatever period that is necessary. So I think that is the most important thing now. We really got to watch to make sure, and actually every one of us have to play our part, you know, to make sure that the circuit breaker works and we are able to stop community spread and deal with this issue of the spread of the virus amongst our foreign workers population. So very fully supportive of shutting down even more businesses, even those who are marginally essential, just to make sure that it works.
Right. We have a question from, I think this goes to the point you just made, and maybe both you and Shanker could answer this. The question is, there have been 3 budgets since the start of the year. Could there be a 4th or a 5th? So either of you, Shanker, would you like to take a shot at that?
I think I've noted, I mean, I don't know why they have to call them budgets, because at the end of the day, I feel that if the circuit breaker or whatever they call it, but it still is a lockdown really, if that goes on, then it's inevitable that they're going to have to continue to help companies. Otherwise, it's going to be a problem.
Right. Just to follow up on that, Shankar, what more can be done on the tax side? You know, I mean, people have mentioned why not a tax holiday for everybody? Then we can move to pay-as-you-go kind of taxation, or are the tax rebates big enough? For example, you mentioned there's no rebate on personal income tax. So could more be done on the tax side?
I guess so. I mean, I think, Vikram, as you know, the government style is to be conservative and drip feed the economy. I think they're going to keep on doing this. They want to preserve their powder for the long term. I think many countries are borrowing out of this. I suppose Singapore is using past reserves. So I'm guessing conceptually that they will not go crazy and start doing too many things. What surprised me personally was there was no relief on GST payments. For instance, but GST is the biggest cash outlay for most companies because they have to pay GST over before their customer even pays them. And that must be causing much pain to many small companies. So I was a bit surprised compared to many other countries who've done this, that was not. I can expect that might come in the future if that's causing problem.
Okay.
Yeah.
Right. And Venkat, any thoughts on fourth budget number 4 and budget number 5?
I hope we don't have one, but I'm sure. I think the government Deputy Prime Minister himself has said even at the last resilience budget that they're prepared to do more. So if this doesn't work, I'm sure they certainly business will be asking for additional support.
Right.
And I'm sure the government will have to come up with again similar support for businesses.
Right. Now let me just turn to the financing or loan help for SMEs. There's a deferral of principal payments until December, and plus there's supposed to be lower interest rates. Now, will banks in practice actually charge lower interest rates to SMEs? Because in the past, they did not. I mean, they charged much higher interest rates to SMEs than they did to big companies. So can we be sure that banks are going to pass on these lower interest rates to these companies? And also, how about whether they'll be cutting credit lines to SMEs?
We have not seen evidence or heard very strong feedback, much feedback from SMEs that they don't have access to credit lines. We have had some feedback earlier that the SME working capital loan was expensive. It was more than 5% in terms of the interest rate charge. Right. But however, with the MAS package whereby they are giving, I think there was a $22 billion loan capital was given to the financial industry. And these are lower cost of capital for the banks to loan out. We have not since heard that the interest rates are expensive. But this is an area to watch because I think the credit is, I think these measures have just started. This is something that we need to monitor. I think the implementation is very important. We heard some anecdotal feedback that in spite of these schemes, banks on giving loans to SMEs are still requiring SMEs to provide personal guarantee, over and above the risk share that the government is prepared to take there and large. So I think this warrants some investigation. I know that, for example, in other countries, in the European countries, for example, in Switzerland, for example, they gave SME loans without guarantee up to, I think, $500,000 Swiss franc. So, and that criteria was very simple. They want to make sure that the loans go straight to the SMEs as quickly as possible. So this is an area for us to monitor at the moment. But as I said, this has just been rolled out, so it's still early days.
Right. Very good. Shankar, now I think you mentioned property tax rebates to tenants. I think Menkit also mentioned this, and these are required to be passed on to tenants, right? Property tax rebates to landlords are required to be passed on to tenants.
Yes.
But there's also the issue of subtenants, because there are a lot of tenants like WeWork, co-working spaces, for example, who have hundreds of subtenants. So can we ensure that these will get passed on to subtenants, not just to the tenants? And the other thing, of course, is that the fine for not passing on the property tax rebate is a maximum of $5,000. Now that sounds quite small. I mean, it might be even smaller than the amount of the rebate. So would you like to comment on those issues?
I think they're good points. I don't think the subtenant issue has really been discussed very much. But if you take your WeWorks of this world, I think they have to think of their reputation going forward. So I'd be surprised if they don't pass on the savings to their tenants because they will have a problem in the long run. And there's, at the moment, I'm sure, a lot of competition out there in that space. So, but subtenant, therefore, the business center space is one thing, but private subtenants, subtenancies, I think it depends on the bargaining power of the tenant. The subtenant doesn't have much bargaining power. My guess is they won't get the benefit because, I mean, let's face it, until this law came, which is recent, very few big landlords passed on their property tax savings to their tenants. I mean, I've been working in this market for a long time, and it was an exception rather than the rule. Okay, so I would say, therefore, there's no legal compulsion. It's more a reputational issue, and then the smaller relationship would not necessarily expect the property tax rebate to pass. But that tenant himself, that company would also be suffering, and they look to save on their own expenses too.
Right.
So that's my sort of thinking on that one.
Okay, we have another question from the floor. This is addressed to Menkit, and I'll put it up. Menkit, we heard your comments about retrenchment and job losses. How imminent are these? And if the circuit breaker is extended by 2 weeks to a month, I mean, he suggests the damage will be substantial and lots of bankruptcies among SMEs. And can you comment on this? And what can the government do further, assuming that the circuit breaker is extended? What more can the government do if they're keen to keep jobs?
Yeah, as I said, there is no official data at the moment. But the support structures, the grassroots, the union networks, the E2I, all have been activated to deal with this. Even SBF has been activated to deal with this. We have a program now called Manpower Connect. We know that there are companies that will shed workers, and we know that there are companies within our membership that will need additional workers. So we are now working together with government to help place workers. First is this SG traineeship. That means there are many thousands of fresh graduates going to come out from ITE, polytechnics and universities. There is also a traineeship grant scheme for them. We're trying to match these graduates to employers as well. So that's one part. Then there is Singaporeans and PRs, and that we are trying to match not just permanent jobs, but companies who need people on a temporary basis, much like what SQ is doing. SQ has redeployed some of their flight crew to other establishments, to hospitals, to MRT. So we are trying to do that on a part-time basis as well as for permanent placement. And we are also doing this for foreign manpower as well. So we're getting ready for this. I would not say that there is a wave. There is a wave now, but because we see that this is going to last some time. It's not a 6 month thing. It could be 12 months. It could be 18 months. So I think we are out there to help our companies deal with the manpower challenges. Yeah.
Right.
Vikram, if I can add something to that.
Sure.
I recently looked at the Hong Kong government's similar measures to job support scheme, although in a far more modest way. One of the conditions they seem to have imposed on companies is that this job support is only valid on condition that you make no redundancies. If you do that, we pull the entire amount for the company. So I don't know if our government will learn from that for the next round of support, but it could be coming.
Right. That's an interesting point. Yeah. But Menkit, you also mentioned there's also a lot of emphasis on training. Now, honestly, do companies have the money to spend on training at this time when they're focused on survival?
Well, a lot of the resources for training at the moment is going to be met by government. So several things has happened. One is that the training fees will be almost subsidized by government 90% for if you send a Singaporean for training. That's number one.
Right.
Individuals will also get an enhanced skill future, particularly those in the middle age group. There is also a skills future credit that is given to enterprises up to $10,000 per enterprise, and this will help them. So my point is that the government is going to come up with a lot of the resources, and I think that there are also quite a lot of relevant training at the moment. So I do not think that we should use the lack of money as a reason actually to not to send workers for training. Yeah, if you can keep that worker and are able to pay the salary of the worker, I think the support for training, the availability of relevant training is always there.
Right. And this is a question for both of you. I mean, how can companies reposition themselves to become stronger during this time? What can they do? Anybody?
Shanker, you want to start?
Let me start. Yeah, I mean, I think let's forget this pandemic as a particular point at the moment, but generally recessions in the past have always been an opportunity for companies to examine their businesses, reposition themselves for new activities, to cut out fat on the existing operations. So I'm very sure that most companies will look at themselves and see how to be in the middle of all the problems to become more lean and mean to succeed going forward. So I would think that, but certainly I think a lot of lessons would have been learned from this in terms of, and good things too, like for instance, us sitting and working from home. Who would have believed that possible in such a major way for the past? So I think there'll be a lot of cleaning up will happen.
Right. Meng, any thoughts?
Well, I think I mean, on the situation that this is not going to be a V-shaped recovery, and this might go on for some time. I think it's important for businesses to look at their own enterprise level and to make sure that they are resilient and examine which part of their businesses they are most, they are more competitive in and more resilient, and keep those business function. As Shanker said, cleaning up is important. Certain things will change, I think. One is, I don't think we're going to go back to business as usual, because I think elements of the virus will continue to exist in our society. The vaccine is not going to be around until 18 months, and even in 18 months, the virus might mutate and the vaccine might not be effective. And therefore, social distancing will continue to be, I think, a norm. You know, so if that is the case, then all the things that we are doing now, working from home, restricted travel, those are going to be the new way in which we will work. So what does that mean for our businesses? I think it's important for our business to look at those situations and see how are they going to plan around it. I would say that if the importance of digital, then countries like Singapore, countries like Indonesia, countries like Vietnam, for very much reliance and heavily leverage on the digital economy. I think those companies in those sorts of spaces, I think will benefit as well. So I think our businesses need to look at it from those contexts. Yeah.
That's interesting. And related to this, what changes in business practices do you think will become permanent?
I think there will be some. I think people will be a little bit. Right now, all countries are looking after themselves. They want to make sure that they have food, they have the medical supplies. So I think there will be some reconfiguration of the supply chain after the crisis. So even like today, for example, Singapore and New Zealand signed a declaration to keep our supplies. So there will be some of reshoring of supply chain away from China to East Asia, and maybe even away from East Asia towards other markets as well. So I think that will change, and I think there will be some opportunities of that in Singapore, because some of the reshoring of critical elements, whether it is data hub or whatever, will come to Singapore. So there will be opportunities there. So I think that will, for me, that will be one big change post COVID-19. Yeah. One other thing that you spoke about today, Vikram, is there a way that we can get around this because of maybe having a looking at a worldwide cooperation on immunity passport? You know, if you can get to that mode, whereby we can certify that people are immune, then we are not so dependent on the lockdown in order to have fully functional. But that is a much further a bigger discussion that we should have.
Yeah. That was an interesting article, Vikram, today, but let's see how it works. I see a lot of room for abuse on that one around the world.
But no, it should be certified. It can't be left only to individuals to self-declare themselves to be immune. So obviously, a lot of work needs to be done on that.
Vikram, on the point you made about business going forward, I read a survey today which found it interesting that the CEO's biggest concern today was not cash flow or demand, but productivity, apparently, the ones they read. So therefore, it'd be interesting at the end of this circuit breaker, when we go back to work, to actually compare how productivity was impacted by all this telecommuting. But it's interesting that was top of mind of most of the CEOs in this survey.
Yeah. There's also a lot of knowledge sharing going on. I mean, for example, scientists are collaborating as never before right now, all online. It's never happened at such an intensity before. And I imagine a lot of people, professionals, are collaborating all over the world. So I think this leads to a lot of knowledge sharing and unprecedented level. And that should also help productivity. But on the other hand, live R&D, actually lab work and so on, that's probably being held up. So I'm not sure where productivity comes out net. Yeah. But Menkit, you mentioned that there could be these shifts in supply chains away from China, lots more reshoring. But wouldn't that add to costs? Wouldn't that make products more expensive and companies less competitive?
I think so. Potentially it will happen because if countries want to reshore everything, certainly it will be more expensive. If Singapore wants to have 30% of our supplies made in Singapore, certainly it's going to be more expensive. But that's the price that we have to pay for security. So that would be the new situation. But I do hope that we won't go fully that way. We still maintain a trade. Trade is continue to be important, and that the best product should be made in the country. You talk about sharing of knowledge. I think it's wonderful to have the scientific community share with each other. But what I worry about now is that there is at the moment no global leadership to make sure that there are rules that everybody can observe. And I think we need global rule making, and not to worsen this particular crisis, particularly on restriction on trade for essential medical supplies and food and things like that. We need good global rule making. Otherwise it will not be effective.
Right. Very good. Shanker, there's something that you mentioned that we could talk about, and which is options on the revenue side of the budget. I mean, we talked a lot about the tax side, but what about the revenue side? I mean, you're going to have budgets being blown out. Our budget deficit is going to be a record this year. And so what can the government do on the revenue side? You mentioned a possibility that the GST increase might need to be done earlier rather than later.
I think the GST is obviously the quickest way for any country to raise revenue because it has a widespread, and Singapore style is to subsidize people at the lower end of society. So therefore the regressive argument tends to go away a little bit. But in terms of raising revenues, I think it's my view the fastest way to do it. So there's 7 to 9% to talk about. I wouldn't be surprised if it starts to pick in 2022 at the earliest at 8% and goes faster at 9% soon after that. Meantime, I'm pretty sure that people have to look at income taxes. So I think the government coffers in any country will be badly damaged after this COVID exercise, and therefore I can see measures all around the world for taxes going up to bring some semblance of normality back on that aspect.
Yeah, but just further on the GST, our threshold for GST is pretty high. I mean, it's $1 million turnover, correct me if I'm wrong. I mean, a lot of other countries have a much lower threshold, so that means their GST tax base is much broader, much bigger. So could we contemplate going there, lowering the threshold?
I mean, that's of course, in a way, they have room to do that because the $1 million threshold is way higher than almost any country. So I would think it's often been talked about, but politically it's not been easy for the government to do it. I guess they will hold on that. There's also a possibility, which many countries do, to have a two-tier GST. One is a standard one and a higher rate for the more luxury type of expenditure. So any possibility is there, but I would expect GST to be an important tool for the government to get their money back.
Right. Minkit, and as a former government official, I think you might have even worked in the tax administration.
No, I've never been in tax administration.
Okay, but you've been in MAS and so on. What do you suggest can be done on the revenue side?
Yeah, certainly the GST is one. I do think that our even on the corporate as well as personal tax, particularly the higher tier, we are already very competitive. I think there's some room if the government wants to move on that side in order to get more revenue from corporate tax as well as from the top tier corporate income tax payers. So I think there are room there.
I think another measure, Vikram, the government probably has, which probably can be considered once the election is out of the way, is to look at the property market. If you remove or reduce ABSD, the market could fly, and therefore the stamp duty collections would be great. But I think this one right now is politically not the time to discuss, but it wouldn't surprise me if a couple of years' time this is talked about.
Right. I'm surprised neither of you have mentioned the biggest contributor to revenue, which is net investment returns, which we only take 50%. Yeah. So would there be scope there, I wonder, to take more of the net investment returns?
It's possible, I'm sure.
Yeah, that's always there.
Okay. Finally, I just want to touch a little bit on the region. I mean, I think one of the trends that people are talking about is more regionalization of trade, right? As protectionism increases and so on, we have regional trade arrangements. We have close links with the countries around us. But what is the impact on the region of this crisis, and how will it affect us? So, any thoughts, Menkit?
We did a very quick survey of our members regarding the impact on our company's regional operations.
Right.
There were a few points. One is that the regional revenue has also dropped, just like Singapore. It has also dropped because the countries in the region is also on lockdown, so their regional revenue is dropped. That's first. Second is that they can't do business because they can't travel.
Right.
So they can't. So everything is in a freeze. So they can't travel. And most of the company surveys that they have put their international they are in cold storage. They've cold storage their internationalization over this particular period. So I think that to me is the situation. So nothing can restart until the borders are restricted. Countries come out of this lockdown. So we have to. I think we have to wait for that. Yeah.
So it's not about just us coming out of the lockdown. It's also about countries around us coming out of lockdown, at least to help these companies that are doing regional business.
Exactly.
Very much.
So, yeah.
Right. Very good. I mean, I think we've come to pretty much the end of end of our webinar. Are there any final thoughts before I close shop? Any?
Well, I would like to say that even though we are likely to be heading into a recession, you know, which is going to be quite different from what we had in the past, I think we should approach this with confidence. Because I think government is there to support. I think businesses are there to support each other as well. The trade association is there to support. I think that is important. I think the most important thing right now, I think for all businesses, is to make sure that, you know, we observe the circuit breaker to make sure that this thing works and it doesn't get this is effective. And then we hang on to our workers. We hang on to our workers because we will need those capability, because sooner or later we're going to have the recovery. Might not be so soon, but we will have the recovery, and we need to have that capability within our enterprises when the region recovers.
Right. Shanker, any thoughts finally?
I think I would like to also end on a positive note. I mean, this crisis is bad, but I think it's not going to last forever. And when it does, I believe there's a lot of pent-up demand out there to restart the economy. And so long as it doesn't prolong too much, and therefore we have structural problems, I feel that the recovery will be good. But so I'm rather be optimistic about it.
Yeah, very good. Actually, yes, even the IMF predicts that the next year there will be quite a bounce back. But I do think that actually we really have to watch the health, the health policy, the health response before we look at the economic response.
Of course.
Yeah. So on that note, relatively optimistic note, I'd have to call this to a close, but not before I thank our speakers, Meng and Shanker, and also many thanks to Lloyds Bank for their support of this webinar. And if you'd like to, you can check the website for future webinars. And thank you all, listeners, for tuning in, and hope to see you again.